What is going on? Welcome back to Trending Stocks. Today I want to talk about 3 stocks to add to your watch list for this upcoming week that could have a very strong likelihood of a squeeze. So I'm going to go over all that. Make sure you guys hit that thumbs up and subscribe. I always greatly appreciate that. And with that, let's get right to it. So starting off with some data points. This upcoming week, of course, is a short week because Monday is a holiday, so Labor Day. But generally, there's not really anything crazy coming out this week that could prompt a market rally and in turn, maybe a squeeze in some cases. A lot of Fed speakers, but still, like I said, a lot of just nothing, unfortunately. But when it comes down to it, there's also a lot of earnings coming out, some pretty hot ones. So C3 AI, there's also GameStop, ChargePoint, and I think that might be it. Maybe DocuSign might gain a little bit of good momentum, but other than that, once again, it's kind of just a flat week. So when it comes down to the 3 stocks that I did pick, I'm choosing it based on the fundamentals and a lot of these circumstances and data points that is available to us. Once again, as I always say, not in any particular order whatsoever, but starting off is good old GameStop. This is the very first time, surprisingly, GameStop has actually been on this list. And the only reason why it is on this list is merely because of its earnings, which is after hours on Wednesday. So there could be a pretty positive surprise as a result of that. If you are looking for a lot of good compiled information, such as previous transcripts, SEC filings, press releases, take a look at Seeking Alpha Premium. I do have a 7-day free trial for you guys for all of that information. But when it comes down to GameStop over the last 1 year, down 33.33%, year to date down, or sorry, up 7.09%, and based on Friday, down 0.7%. So when it comes down to GameStop, just on a side note, I have noticed that a lot of people just don't care about it as much as it was. AMC has obviously taken the throne as being the king of all the meme stocks essentially, whereas GameStop, I think it's just been the unnecessary uncle part of that whole scenario. So let me know your thoughts on that, or are you still a big advocate of GameStop? What's your thoughts overall? But right now, short score is currently 86, utilization is 84.81%. Currently 27.17% of the free float is on loan, and right now 20.23% of the free float is being shorted. 53.76 million shares overall are being shorted, and based on Friday, shorts did return 1.36 million. So kind of interesting. Cost to borrow is very small per se, so 4.41% is the average. And based on this, so the interactive broker short availability, there is a pretty good amount of shares available if need be for shorting. And like I mentioned, the only reason why this is on this list, because a lot of these stats such as the cost to borrow isn't the best per se, but it's because of their earnings. So if there is surprisingly better than expected earnings, whether it be for earnings per share, revenue, or their future guidance, then that could prompt a squeeze. So let me know your thoughts on that in the comments below. And as far as any specific stuff for GameStop coming out this week, I don't anticipate anything based on what I've seen, but if you do know of anything, let me know. But moving on to the second stock, it is right here. So GOEV, so Canoo, and based on Friday, it did go down 0.34%. Over the last 1 year, down 80.38%, and year to date 52.76. So Canoo has definitely struggled. And I think that's more of a understatement per se. But of course, it's on here because of a lot of the fundamentals. So Canoo is more of a different one because I feel like a lot of people is getting a lot of attention because of its discounted price, which might allure a lot more value investors in per se. That, especially if you couple that with the data that I'm going to share with you, I think this is why potentially this one could be a squeeze. But of course, like I mentioned, there's no real data points, no earnings that could really prompt GOEV to go up. So once again, as far as data points, short score is currently 81, utilization is 85.58%, percentage free float on loan is 15.87, and the estimated short interest is 12.34. So of course, I think that is fair to assume with it being so tight that most likely there's a lot of naked shorting that is occurring with obviously Canoo. But 298,000 shares were returned on Friday. 60.27 million shares overall are being shorted. Cost to borrow average is 39.6%. So of course, like I mentioned, Canoo has actually been struggling for a while now. So you kind of have to factor that there might be a little bit more pain early on. So of course there might be a little bit more of a further downtrend, but that is what is going to allure value investors in. But right now there is currently, based on this, the interactive broker short availability, 1.3 million shares available for shorting. So potentially this one is a fairly good risk versus return potentially, but shorts do have a lot of shares at their disposal if they do want to increase. So take this one with a grain of salt. Keep in mind, I am not a financial advisor, so you guys always do your own due diligence. When it comes down to the third stock, it is right here. So C3 AI, so ticker is AI, based on Friday up 0.64%, year to date up 115.01%, and year to date 182.2% in the green. So this one definitely is probably one of the better performing ones that's been on this list in the past, but surprisingly a lot of people are saying that this whole AI sector is in a bubble still after almost, I think this is going to be the second quarter, maybe third quarter potentially, that it's just been rallying. And keep in mind also C3 AI does have their earnings after hours on Wednesday, so once again there might be a kind of a double benefit based on that. But looking right here, short score is currently 73, utilization is 96.84%, and this one is crazy, 51.54% of the free float is being shorted. So that is very, very high. And as well, 37.68% of the free float is being shorted, 35.99 million shares overall are being shorted, and based on Friday, small change, but around 29,000 shares were returned. Cost to borrow average is 11.42%. So on paper, this definitely has everything that you need for a good squeeze. And now if you throw in some surprisingly good earnings, then there you have it. And a very comparable company, not exactly the same, but Palantir recently had their earnings and it was very, very good. So I think it's fair to assume that C3 AI will follow the same suit. So who knows? I know their last earnings were fairly good, so this one might be a duplication of that. Let me know your thoughts on all of this in the comments below. Give yourself a shout out if you have been owning any of these three companies and where you see things going at least, or if there's any other stocks that you see as a squeeze, let me know and why in the comments below so other people can kind of see that. And one final thing, take advantage of amazing promos. This one just started on September the 1st. Open up a free account with MULN, throw $100 at it though, and you get 5 free stocks. Each stock could be valued up to $2,000. So this is a crazy deal. Link in the description below and also the comments. With that said, I appreciate you all watching.